Now we can do our forecasted balance sheet. So the first part I'll start with is this 15,000 because we started off with the 15 and then we figured out how much we needed in new funds. So from the previous video, we figured out we needed $26,000. So I'm just going to add that to it. And then that gives me a new total of notes payable for 41,000. And I'm now going to assume that the liabilities and the assets will all increase proportionately with our increase in sales. So that means my cash, accounts receivable, inventory, equipment, accounts payable, and accrued expenses are all going to increase in proportion. So now this is what you would do. You would take your 5,000, so for cash, and then divide that by your old sales, which is the 200,000. And then you would multiply that by your new sales of 300,000. So this will give you a percentage, and then you can multiply that by your new sales. So I'll just say old and new. So when you do 5,000 divided by 200,000 times 300,000, that gives me 7,500. Okay, we'll do the same thing with the accounts receivable. Take your accounts receivable, divide that by the old sales to get a ratio, and then multiply that by your new sales. And then that works out to 60,000. Then we can take your inventory of 25,000, divide that by your old sales, which is 200, and then multiply that by your new sales of 300,000. And that will give us 37,500. Okay, in this question, we already made the assumption that equipment increases proportionately with our sales, so then we include this one in the equation too. So 50,000 divided by 200,000 to get your ratio, and then multiply that by your new sales of 300,000. And that gives me 75,000. And if you want to do proper presentation of the balance sheet, then what we can do here is just do a subtotal for current assets. So you can add the 75, 60, and 37,500 up. So that'll give me 105. And then if you want to add your current assets and your equipment, that'll give me total assets of 180,000. Okay, now let's go down to the liability side. So we'll do the same thing. So our accounts payable, we'll take 40,000, divide that by the old sales, and then multiply that by the new sales. And that gives us 60,000. And then the accrued expenses. So 10,000 divided by the 200. And then multiply that by 300,000. So your new sales. And that gives us 15,000. So when we add up all of our total liabilities, that gives us the 60, 41, and 15. Those equal 116,000. Okay. Now with common stock, we're just going to assume that that does not change. So we're just going to take that 10,000. Okay. Now with retained earnings, we can do this two different ways. Okay. So in order to find out my retained earnings, what you can do is we know that assets always equal liabilities and shareholders' equity. So we know that this bottom part of the balance sheet has to equal 180. So what you can do is you can take the 180 minus the 116 and minus the 10, and then that will balance out this part. So my retained earnings is 54. Okay, or what you can do is you can take the 45, which is your original retained earnings, and then you can add the third part of the formula. So in the last spreadsheet, or in the last video, this part of the formula ended up being 9,000. So you can just add that there. And then that will give you the 54,000 as well.